In this video, you'll be learning about this topic.
Talk to us about Blockstream, because you guys are working on, I don't think Adam refers to it as a second layer. He calls it like layer 1.5 with Liquid. Talk to us about what Liquid is, how it's different than Lightning, what it is you guys are trying to achieve with this. Fire away.
All right, so I guess the first starting point is Liquid. So Liquid is an inter-exchange settlement network. It's a sidechain. So it's a separate blockchain anchored to the Bitcoin blockchain by a federation. So it's not decentralized like Bitcoin. There is a federation of members, and a subset of those members are running these functionary boxes that essentially serve as the miners. So these members are extending the Liquid blockchain, and they are geographically and geopolitically dispersed. So, if you wanted to compare to Ethereum, I would say Liquid is more decentralized than Ethereum is, because you have this federation around the world versus one hosting provider in Infura. But the initial goal with Liquid was inter-exchange settlement. And this was actually how I first learned about Liquid. So I was at BTCEC at that time, and we were one of the first members to join. So I saw this technology, and I thought this has huge potential to improve liquidity between exchanges and being able to issue assets too. So the other thing is that you can issue assets on the Liquid network, like stablecoins, such as USDT. We have L-CAD from Bull Bitcoin and a JPY stablecoin from Crypto Garage. But it's basically a way to move Bitcoin quickly from place to place. So the block times in Liquid are 1 minute, and you have full settlement in 2 minutes, and you have confidential transactions as well as confidential assets. So that means every transaction in Liquid is private. So if you've seen on Twitter, when people send a large amount of Bitcoin to an exchange wallet, it's broadcasted out saying, someone has sent $100 million to this exchange, and that allows you to front run or potentially trade against them. And that's the same case for stablecoins too, because they're all very transparent and public. But in Liquid, it's all encrypted. So nobody can see what you're sending to someone else. All the different transactions, whether it's Bitcoin or a stablecoin, they look identical from one another.
And I think this is a really important point. The native currency or the native token that's associated with Liquid is Bitcoin that's through an atomic swap pegged into Liquid, correct?
It's just a peg. So Liquid does not have a token. There's a lot of projects out there, they have their own token, but the native currency of Liquid is Bitcoin pegged into the network. So what you do is you create a peg-in transaction, and the Liquid blockchain watches the Bitcoin blockchain for that. So let's say you want to peg in 10 coins. You create a transaction to the Liquid wallet. Liquid detects that, and then it'll issue you on the Liquid side 10 Liquid Bitcoin. And that's what you would transact in the network. The Liquid Bitcoin pays for the fees of the Liquid network as well. So that's the native currency. It is Bitcoin. It's a Bitcoin sidechain.
Now, whenever I look at the purpose of why Adam and team have gone about this, to me, it seems like Adam's trying to provide a solution to market makers between exchanges. So if you're trying to move very large sums of money between exchanges in order to be a market maker, which is a vital aspect of markets, this seems like this is probably one of the best solutions and one of the fastest solutions to do it without somebody front running you. Would you agree with that, or is there some other type of use case that I'm missing?
I think that's the primary use case. Or even if you're a trader and you don't want to keep your coins on exchange, like you're done trading for the day, you can take it off and put it back on. Like one apprehension that people have is, if I take my coins off exchange, then I need to pay potentially high fees on the main chain, and I need to wait for a confirmation, because block times on Bitcoin are not set. It's usually every 10 minutes, but it is not deterministic. Whereas in Liquid, it's like a clockwork. Every minute there is a block, because it is a federation signing those blocks. So you're guaranteed to be able to move on and off exchange quickly or between exchanges quickly, which you cannot do with Bitcoin's main chain.
So it seems to me like Adam strongly believes that if you're not using Bitcoin or basically pegging Bitcoin into whatever protocol you develop, in the long game and in the long run, it's going to be cannibalized, or that some other protocol is going to step in that's going to provide some type of solution that uses Bitcoin as its native currency for processing purposes, I think is probably the best way to describe it. Talk to us about that idea. Am I right about that, or would you describe it differently?
You would think so, but I think it's far easier to print your own money, like some of these other chains or protocols, and have your own token and then wrap Bitcoin on your chain. Because then you have your own war chest of your printed money out of thin air that you can use to incentivize adoption. So it's been a challenge for us to push for liquid adoption because a lot of these other protocols out there, they have their war chest and they can say to an exchange, well, integrate this thing and we'll pay you a couple $1,000,000, and then they can push their adoption through essentially by force. And then they can wrap Bitcoin on their protocols, like say on Ethereum. But those are not decentralized in any way. It's like a single service provider. So wrapped Bitcoin, or WBTC, is BitGo. They're the custodian of that.
But I guess my point, and obviously I agree with what you're saying, and I can see how that can be very frustrating for you guys, but does it win in the long term? So like if we're looking at this with a 10 or 20-year lens, don't they always just revert back to manipulation and debasement of their own protocol token? And does that end in their own demise? Meanwhile, somebody who's been doing something like what you guys are doing, which is using Bitcoin as your native token, it wins in the long run, even though it's kind of the tortoise in the race.
Yeah, I think in the long run, this will win out. Also because of better technology. Like a lot of the other protocols out there are more like science experiments, whereas Liquid and like Elements, which Liquid is based off of, is a fork of Bitcoin. So you're always moving lockstep with Bitcoin development. We can actually roll out new features on the Liquid network first that would come out later on Bitcoin. So for example, we had SegWit first in Liquid, and we are working on getting Taproot out in Liquid. So I believe technologically it's more reliable, more robust, and more secure than a lot of the other options. But right now, security almost doesn't matter. Like if you take Ethereum as an example, looking at it realistically, you'd think after so many hacks and security issues and failures that people would not support it or buy their token. But that's not the case. It's almost like the more they get hacked, the more the price goes up. So I don't believe the market is rational.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.